Yo, I told you guys last week that the market was going to crash. I made a video, I uploaded to YouTube. I told everyone on the Patreon through a post on the Discord server. I told everyone the market was going to crash. I told everyone that I was selling my stocks, getting my dry powder ready so that I can buy these dips. And what is happening? The market is correcting. The market is crashing. We are seeing red across the board, and the major indices now are starting to fall, even though a lot of stocks, the majority of stocks, started to fall early this week and late last week. So what the hell is going on with the market? And now that we are seeing that it's correcting, what can we do? Where can we buy stocks? Where can we be safe? What am I going to be doing in the future when it comes to the stock market? So it's 6 o'clock in the morning. I just rolled out of bed. I want to get this video out to you guys. I gotta go to work later. I got a baby to take care of. There's a lot on my plate that I just gonna do this off the cuff. I have a few notes on my phone that I want to cover, but other than that, this video is going to be really simple. There's not going to be any major editing or anything like that. We are just going to go right through the point. So let's start off. So what is happening with the market right now? Because we are seeing some weird shit. The 10-year is dropping. Growth alongside with the 10-year is also dropping. And pretty much the only stocks that were staying up were mega cap tech stocks, your FANG stocks, Facebook, Apple, Amazon, Netflix, Google, and you can throw in Microsoft in there as well, even though that Jedi contract did drop the stock somewhat. All of those major cap tech stocks are doing well because they trade inverse of the 10-year. If the 10-year decreases, those stocks are going to go up. But unlike before, when we saw that 10-year increase from around 0.6% to 1.5% or even higher, we saw a lot of growth stocks drop during that move. But unlike before, now that we are seeing a decrease in the 10-year, funds like the ARK-K fund are also dropping with it. So it's not like growth is growing because of the 10-year dropping. It's like everything is dropping, and the only thing that is growing is large cap, mega cap tech. So let's explain what a 10-year bond is. The 10-year is a 10-year treasury bond. It's a bond that goes over 10 years, and a bond is government debt. And how do yields work for the 10-year? And this is very important, and this is where people need to understand, because everything is driven by the yield of the 10-year right now. The treasury bond, you can think of it this way. It's just a piece of paper, and if you hold that piece of paper, you're going to get paid $1 a year. Now, how much you pay for that piece of paper will impact what your yields are. If you pay $100 for that piece of paper and you get $1 each year, well, then your yield, your treasury yield, is going to be 1%. If you pay $50 for that piece of paper and you get $1 each year, then your yield is going to be 2%. So the yield is based on how much people are paying for the treasury bond. And payment is decided by how many people are bidding and supply. It's all about supply and demand for everything in this world. So right now, what are we seeing in the 10-year treasury bond market? We are seeing a lot of buyers. So they are paying more for the treasury bond. And that is why we are seeing a decrease in the treasury yield. If we see less buyers, then that will decrease the amount that they pay per bond, and that will increase the yield. And this is important because right now the Federal Reserve is buying a ton of bonds. We are getting people buying bonds from overseas. And also, if people are afraid of the economy and the stock market, they might also be buying bonds. So there's going to be a lot of buyers of bonds, and that's going to be decreasing the yield. And the wild card here is that many people were short treasury bonds, meaning that they think yields are going to go up. And now we are starting to see a short squeeze in the treasury markets, and that is increasing buyers because when shorts have to cover, they gotta buy. So there's another element of buyers in the 10-year, and that is causing the yield to crash. But it's important to know that if we have a strong economy, the 10-year is going to increase with it, because the stronger the economy is, then that means less people are going to want to put their money in bonds, which are very low risk, and they're going to be putting their money into the economy. They're going to invest in the economy instead. They're going to invest in the stock market, in real estate, in alternative forms of investing, and that's going to remove buyers from the treasury markets, put them elsewhere, and that will increase yields. So when the economy increases, yields usually rise with it. So with all of that being said, what do I think is going to happen? This drop right now in the 10-year is transitory. It's not going to last, and we are going to move higher because I believe we are going to have a strong economy, and we are beginning an economic cycle which is going to be very prosperous for many companies long term. So you gotta grow cojones. You gotta buy the dip here. You cannot be afraid of what's happening, and you gotta add to positions that you think are going to do well in a strong economy where people are buying left and right. Where do I want to be moving forward if I believe the 10-year is going to spike back up, as it should if we have a strong economy? Well, the first and the most obvious place is the financial sector, because banks do well when yields rise, and also banks do well when we have a strong economy because they lend more money out as well. And the financial sector right now is increasing share buybacks and increasing dividend yields, and it's just a great place to be, and the valuations are favorable in that sector. So yes, the financial sector, companies like Ally Financial, that's the one that I personally like, are going to do well moving forward. You also want to be in companies that do well when the economy is doing well. So where do I think? First off, I think travel and services. People are going to get out, people are going to be traveling, people are going to be buying. So the energy sector, because travel, hotel chains, Uber, Airbnb, airlines, cruise lines, they're all going to do well with people traveling. And your consumer staples will also be doing well because of the economy. So long story short here, what do you want to be doing? You want to be betting on America. You want to be betting that the economy is going to rebound and we are going to be strong here in American soil. So you want to bet on the revival of America. You want to be betting on companies that are going to thrive when the economy is doing well. When the 10-year drops to these low rates, it might be a signal that the economy is not going to be strong. However, I think that the drop in the 10-year is because of technical reasons, it's because of a squeeze, and it's not going to last, and ultimately we are going to rebound and move higher. And that is because I do not believe that right now we are going to have a poor economy. So grow your cojones, buy the dips, buy value stocks because they are undervalued, because they are going to be growing at great rates because the economy is going to be growing as well. But that wraps it up, mi gente. I thank you so much for your time. If you want to join the community of over 500 investors where I've warned you guys time and time again to get your dry powder ready because we are going to be seeing a dip, you can join the community by joining the Patreon. A link is provided down below to the Discord server. But with all that being said, it's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!